Streams, I am fully revealing my proprietary safe wheel strategy for free. Using my 28 years experience, I've developed the safe wheel strategy to cancel out the risks associated with the normal wheel strategy. I also designed the system to only need my attention once a week on Mondays and on rare occasions Fridays. And this is what I call a level 5 strategy. Now what you see on the screen is the trader matrix. I developed this to make it easy to distinguish between trading levels. After taking over 30 online stock and options courses, I've found that I'm the only level 5 trader that is not using portfolio margin. Portfolio margin is used for large accounts over $100,000. Now, after 28 years, I've only found one edge in trading, and that is selling option premium. Level 5 trade systems are the only way to sell option premium efficiently and safely. For a better explanation of the 5 trading levels, see the link in the description for the video called The 5 Stages of a Trader. Okay, let's get started. First, I want to do a sound check. Can you guys hear me? Please post in the comments yes or no. Okay. Yes. Okay, good. All right, let's get started here. First thing I always want you guys to do is to post any questions you might have. If you post those right now, then I'll have a chance to go over those during the live stream. I won't miss them. Okay. First, let's talk about the earnings edge. What happened last week? As you can see, my earnings edge account is started with $5,000. Now it's up to $6,660. Now you might have noticed that that is the same as the week before, the same balance, because I did not take a trade last week. There were plenty of stocks that had earnings, but none of them fit through my filter. So if nothing fits through the filter, I don't want to place a trade. I'm not just going to place a trade because, oh, I got to place a trade that week. I'm going to make sure, or at least have a high probability of that trade being successful. And I didn't see that last week, so there were no trades last week. All right, next item. Let's get into the safe wheel. That would be this account here. What happened last week? So last week I sold the 2450 put, and Macy's went under 2450 last Friday, and I was assigned. So I own 100 shares. So what's next in this wheel, the wheel strategy, is you sell a covered call. So you want to collect more premium. You don't do anything with the hedge. So let's take a look at selling the covered call. Let me make sure I'm on Macy's here. I want to sell short-term premium. So the ones that are 4 days old, the ones that expire this Friday, those are the calls that I'm going to sell, or the covered call I'm going to sell. And remember, I got in at 2450, so I want to go at least at the 2450 range, or strike, and I want to get at least about 25 cents. So I can get, going to 25.50, I can get 38 cents. So I'm going to go there. This one's a little bit low. The 26, I could technically sell that. That's probably going to get me around that 25 cents. But I'm going to take a little more premium here. But I like to get as far away as possible, because then when I get called away, there's more profit. So I'm going to sell this covered call here. I'm going to do one of those because that's my sizing. Remember, I started with a $5,000 account. So mid price here, 36. I'll try to get 37. Okay, that filled right away. Now I need to protect my hedge. And the way I do that is buy something around $5, $6. I'll see if I can get this one for $6 here. This 27.50. I want to get as close as I can or as low as I can. And I'll pay $6. But I won't pay $7. This will protect my hedge if it fills. Okay, so that's not going to fill. So I'm going to go to the strike price, the strike that's a little bit higher. This one here. I'll try to get 4 cents. I'll try to pay $4, but it might not, so just get 5. This should fill. Yeah. Okay. So now we have our wheel strategy. I don't even come in and take a look at this until Monday mornings. Now, I do have an alarm set for the end of the trading day on Friday, so I can go in and take a look at Macy's. And the reason why I look at it on Friday just for a minute, not even a minute, for 10 seconds, is to make sure that it's not above this strike that I bought. So this long one, this 28 call, I'm going to go in on Friday right at the end and see if Macy's is above 28. If it's above 28, I'm going to sell this call. If not, I just leave it alone and I come in on Mondays. When I come in on Mondays, I don't even know if I've been assigned. I don't pay attention to it. I just come in like I just did right now. I'll look at it just a little bit before the live stream, kind of know what's going on. And that's what I do. I don't really pay much attention to it. Okay. Another thing is the safe wheel guidelines and flowcharts. So I put together guidelines and flowcharts so it would help you if you're interested in the safe wheel. And I still have those at a substantial discount, and they're available. There's a link in the description for that. Now, let me talk about the percent returns. On the earnings edge, we're up about $1,600 to $60 this year, up about 33% on the year. And then on the safe wheel, up about 874. That's approximately 17%. So I'm up 17% on the safe wheel. One thing I want to look at real quick is the market. How has the market been doing? Let's go into the market. So we ended here. Yeah, 1231. And we're down here. So you can see, if you look right up about there, you'll see that the market's down around 13%. So with the market down 13%, we're up 33%, up 17%. Pretty good. I like both of these strategies. Sometimes it's better than just going long the market, as you can see. All right, so let's get into questions. See if there's any questions. All right. So how do you use the hedge in case of a high fall in the stock price? So if the stock price goes down significantly, the hedge will actually make more money than what the stock is actually losing in value, because you own the shares. So say I own 100 shares, well, I have 3 long puts, so that's equivalent to 300 long shares. So that's how that hedge covers for a loss, or it wouldn't be a loss. Hedges to the downside. Wolf, it appears the safe wheel works particularly well when the underlying stock moves sideways or downwards, where the safe wheel also works, the underlying gradually and consistently grinds higher. Yeah, so if it grinds higher, it will eventually work because the stock just doesn't continue to just grind higher forever. But you could have some drawdowns. Like I said, my back tests show about a 10% return over annualized, so every year. So we're vastly outperforming, because you can see that Macy's is just trending sideways. So that's really good. And, in my back test, you've got 2017, 2019, where those particular years, the market just kind of grinded higher, 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 higher. And so those are, this safe wheel still made money in those environments, but just not as much. John, why do you think the actual safe wheel trading is so much more profitable than the back test. It's because of the volatility. It's also because of the sideways actions that we're getting with Macy's. I mean, take a look at this. I mean, look at how much sideways action we're getting. That's makes this system really profitable. John, or are you making better decisions in real time? No, I'm not making any different decisions versus my back test. I'm making the exact same decisions I made during the back test. They're black and white rules. Please show analysis tab. Okay, sure. The analyze tab. Make sure this is properly checked off. Yeah. So you have your, make sure this is done right. We got the stock and the 3. And where are we here? So you can see the T+0 line. It's nice. Very nice. Gamma. That's negative gamma. It's kind of going down a little bit. So you can see that if the Macy's goes higher, it's gonna lose a little bit in value, but it still turns way back up here. So that's a nice T+0 line there. Okay, Eric, why do you bother with buying the call if you're selling a covered call and you're assigned? Even if I sell the covered call and I'm assigned, let's say that Macy's goes to $40, something crazy happens. I'm protecting the 3 put hedges. Let's see, where are those? These 3 these 3 puts right here, they're currently worth $1.96. They'll go to, I mean, if Macy's goes to like 35 or 40, these things will be like, I don't know, 20 cents. I mean, I'll lose all of those, all of that. So I have this little call right here that'll cover that loss if that happens. So that way everything is hedged. Even my hedge is hedged. And that's what I'm protecting, my hedge. John, you don't need to answer this today. Is PEN a good stock candidate for your criteria? I'm just going to say probably not, just by not looking at when I'm thinking about PEN, I don't really recognize it. And if I don't recognize it, it probably doesn't have very liquid underlyings, a very liquid option. So look at the difference between the bid-ask spread right here, 11 and 13 cents, 41 and 46, 60 and 67. These are tight. If you look at PEN, you're probably going to get really wide bid-ask spreads. Let's take a look. Oh, wow. Okay. Never heard of this stock. Didn't know it was this liquid. This is fairly liquid. But no, I wouldn't. I want to do something that might work. I'd have to take a look at it. It's a possibility. It is a possibility. Yeah. But 91, 110. So you're what? A 30-cent spread when you started getting around $1. Let's look at Macy's when you're around $1. 112 and 121, an 8-cent spread. So you can see that this, I would stick with more liquid. I would stay away from PEN because of that reason. Earnings Edge questions. A couple weeks ago, you made profit, but some subscribers didn't. Was it because of a delay in getting alerts? No, it wasn't a delay because everybody had the alert, I'd say within 10 or 20 seconds after I was filled. It just happened that I got filled, and the other half, not everybody lost. Half the subscribers lost, and the other half made some money, and they kind of closed their positions earlier. But for some reason, I got a fill, and other people didn't get filled. So it really didn't have anything to do with the delay in the alert. It had to do with the fills. Does the course, guidelines, and flowchart teach how to implement this strategy on your own? No, I mean, the best way to learn how to implement the strategy is to watch my live streams like you are now, or you can go back into the history of the live streams and you can see everything. I explain everything as best I can, but then there's always further questions or further detailed questions, and that's what the guidelines and the flowchart talk about. They talk about the scenarios that I don't come across in the live stream, because I don't come across every scenario during the live stream. And that's what those things cover, all the other aspects. The flow chart does. It's a beautiful strategy. Yeah, I think so. Would you trade the safe wheel with larger account? Let's say 50K. Yes, I would. Yes, I would. Would I trade the earnings edge with a larger account? No, I would not. Not unless I grew the account to a larger account from the earnings edge. Then yes, I would continue to trade that large account. But with a safe wheel, I would scale it up. How am I sending out alerts for the earnings edge? I use Discord, and within Discord, there's certain channels or certain areas that you can go to that are only approved. So I would approve you to get into a certain channel. And then within Discord, you can tell it to send an alert to you. Like whenever I post something in a certain channel, it'll send a little alert to you, so you know when it happens. Don, so we know that Real P&L does good. Subscribers, what % of profits are you making and over what period of time? Yeah, I would be welcome for them to answer any of those questions. You'll see if you get into the earnings edge, we have a separate chat area, and you can see what everybody's talking about. Once you get in, you'll be able to get everybody else's opinion of what's going on in there. And it's pretty much all good, positive stuff. Would you mind creating a playlist with all safe wheel videos? Yeah, I can do that. I don't know how well I'm going to continue to keep it up. I might forget to keep it going, but I can definitely do that. Let me write that down. A second. Safe wheel playlist. Victor, how do you hedge the hedge of the hedge? LOL. Okay. I don't think I need to hedge the hedge of the hedge. All right. Jan, can you buy a protective put in less days if the theta is the same? Well, you know, it's all relative. So the short-term theta or volatility is going to be related to the longer term theta or volatility. They kind of link together. So I like the 150 days, and that's really what back tested well. If you go with the 100 days, it might look really good when you first get in, but maybe the volatility drops or something changes, and now those 100-day ones are the theta increases significantly. So I would stay with 150 days. I hope that answered your question. Don, do you have to have at least 25K in order to execute these trades? So I started this account with $5,000 with a margin account, and that's what I would recommend that you would do also if you wanted to follow me. 5,000 would be the minimum, what I would recommend. And I would actually recommend, even if you had $500,000 or whatever, that you do start with $5,000, because you want to learn the strategy first before you size it up. Such a block of okay. What are your thoughts about David Jaffe, and how do you differ from David in terms of trading? I think David Jaffe is extremely smart. He is very, he cares about his students. He's ethical. He's honest. How do we differ? Well, he does more of he sells premium, but there's some risk there. So, you know, I would if I were to trade his system, I would only take maybe 10 to 20% of what my account was worth and trade it. I would keep my size really low, because he'll make good high returns, but then sometimes there's some risk in there. So keep the size super low. That's what I would do with him. And how are they different? How are we different? My trades are always hedged, and I don't know if all his trades are always hedged. Sometimes his trades have stops, I should call them, or hedges, but not all the time. Okay, any other questions? All right, I don't see any other questions. One thing I always like to say, if the P&L is not real, what else are they trying to conceal?